Let's talk about how to invest in real estate. In just a minute, I'm going to share with you the strategy that we've used to build a seven-figure portfolio of single-family homes and our first commercial property. But really, before we talk about how to do it, we have to ask the question, should we do it? There's really three key questions you want to ask yourself before venturing down the real estate path. The first one is, does it fit into your long-term goals? Do you have a long-term goal? If you haven't set your long-term wealth goals, right below this video, you'll find a link to the In Search of Wealth training page. No email needed. All the videos are free. You'll get a good view about how to set your long-term goals. But in setting them, you have to ask yourself, where does real estate fit in? It is a long-term wealth accumulation part of your portfolio, and it can also be a great cash flow element to your portfolio. But it does need to be a strategic part of your portfolio, because when we ask the second question, which is, do you have the resources to invest in real estate? That's where this becomes more important. As an entrepreneur, which if you're a real estate investor, you're an entrepreneur. Most likely, if you're watching this video, you're some other type of entrepreneur as well, in that you're a coach or you own a digital marketing agency or some type of service-based business. And the resources that we each have at our disposal are limited. Real estate often can take a large chunk of those assets up front in order to be able to start your investing journey. So you need to make sure that it fits into your long-term goal and that the resources that you're using for real estate investing aren't better suited other places. If you're an e-commerce seller, could you be buying more inventory, and could you over time grow that money faster? Real estate, as the model that I'm going to show you in here in a second, really is a long-term 10-year play that, when coupled together with multiple deals over an extended period of time, helps you build a significant part of your overall wealth profile, and it helps you build a significant amount of monthly cash flow. So the third part about whether or not you should invest in real estate is, do you know the numbers? And the best way I thought to do this, instead of trying to just talk through this, was to actually show you the numbers. And so I'm going to share my screen here, and we are going to go over a deal, which is what you probably want to do. All right. So hopefully you can see my screen now. The link to this document is below. It's a read-only link. So what you would want to do once you come over here is you want to go to File. You want to go to Make a Copy. And then you'll be able to create a version of this that you can save on your own computer and use on your own. So we're in kind of central northern Ohio. We're in the Akron-Canton area. The Midwest is really good for this. Now, if you're living in New York City or San Francisco or Chicago, this math just does not work for you. I'm going by what works for us in our market, but this will work in 80% of the country. If you live in the 20% of the big cities, the math's probably not right. So in our market, and these numbers have gone up a little bit, we can buy a single family home in a decent school district in good shape. We have a very strict rule where we only buy brick ranches with a 2-car garage. We do that so that we know that we have a wide variety of potential renters. When you get into multi-story or split level, you do sometimes cut yourself out from being able to take people in retirement who don't want to have steps. So 2-car attached garage is just something that's desirable. So we want to buy the properties that are the easiest to maintain and the properties that are easiest to rent. Now, when you're dealing in commercial loans and rental real estate, you're almost always going to have to put at least 20% down. So if the home costs $120, that's the cost including that's the price including all closing costs and docs. The down payment's $20. That means we need $24,000 in cash. So right out of the gate, we're going back to that resource question. If you are in business and you have $24,000 that you could use to buy a piece of real estate that'll ROI in 10 years, could that $24,000 be invested other ways that will get you a greater return? Diversification of your portfolio would lead to a different conversation, but for the simplicity of this video, we're just going to go with that. So that means you're going to borrow $96,000. Now that we know what it's going to cost us to get into the deal, let's figure out whether or not it's worth it. The expected rent in our market is around $1,400. Now, we have some properties that rent for $1,200. We have one that rents for $1,700, and they're all very similar. So You want to do your market research, specifically the houses around the one that you're trying to buy. We take that and we divide it by the number of months that it will take to pay off. So in this case, if we're buying a $120,000 home, we can get $1,400 a month. That's 85 months, 86 months. So that's a little over 7 years. That's actually a home run. We will not go over 10 years on a single family property. A duplex, maybe we'll go 10 to 12, but on a single family, it needs to be within 7 to 10. And I'll be honest with you, the deals that we found were less than 7 years old, usually needed a lot of legwork. This type of property is almost move-in ready. What we consider move-in ready is we might have to paint, we might have to carpet, we might have to put in some utilities, but we're not remodeling an entire bathroom or remodeling an entire kitchen. We're trying to buy them so we can put a limited amount of capital in and be up and running with the property in a month. In fact, before we even close, we've got that listing up saying coming soon, and we know exactly what we're going to need to do to get in there and get it done and get it ready. Commercial loans are going to be 10 years or less, so you need to keep that in mind. They're also going to carry a higher interest rate than, say, a traditional mortgage on your primary residence, which can go out 30 years. Monthly mortgage, now you can do a Google search for a mortgage calculator. Google actually has a pretty nice one, very basic. It'll show you that your monthly mortgage payment on $96,000 at 5% is going to be around $1,018 a month. Your property tax, in our market, it's 1.25% of home value divided by 12. That's $125. Now you have to remember that you're probably going to pay that in 6-month or 12-month increments. So unless you escrow this, one caveat that I would say to borrowing in this space is that most of the big banks like Chase is not going to do a loan like this. You're going to want to go to the local credit unions or the smaller banks in your community. They're more likely to loan on this. And of course, it's always a good idea to have a banking relationship with the big banks and a banking relationship with a small local bank. It'll pay dividends in the future. Insurance, I just put a round number in. On a house like this, I think it's more like $75, but I put 100 just to make it round. So my total monthly costs on this deal is going to be $1,243. Okay. So my monthly net's going to be 157. Now that's awesome. That means I'm going to break even on this property. In fact, I'm going to pocket a little bit. Now you do always want to consider having a little extra money set aside for repairs, or if you can't rent the house out for a while, or if you have to drop the expected rent for some reason, or especially in today's age, if somebody doesn't pay rent for a month or two, you've got to have a cushion. In fact, if you're going to get into this business, you should have a cushion as big as your down payment sitting in cash or an asset that you can quickly liquidate into cash that doesn't have an extreme volatility ratio on it so that you're always protected. Now, the number that I didn't put in here is the really fun number. So what happens after 10 years? So let's go over here and let's do this times 12. So this number right here to me is the important one. And there's a reason that I want to type it. This is my annual income once paid off. This is why I do this. We now have 4 of these homes plus some commercial property. And we look at it in the future. Our goal is to buy one of these properties a year, or we built a new building last year and we're going to build another building again this year. We want to do one deal a year. And ultimately what we're shooting towards is how can we replace our entire income from the businesses that we own with just the cash flow from real estate? And at what point will that happen? This is how it ties back into that first question. How does real estate fit into your long-term wealth goals? We know that we're building a multi-million-dollar portfolio of real estate holdings. More importantly, we know that we're building a cash flow revenue stream that will last the rest of our lives. And if you set your trusts and your accounts up correctly, for generations to come, they'll have this opportunity to live off of this cash flow. You get 5 or 6 of these houses paid off, and now you've got a 6-figure income, and you have to do very little to maintain this other than collect rent and make sure the roofs don't fall off, which sometimes they do when trees fall through them. So that has happened to us as well. The goal of this video was this, to show you exactly how we structure a real estate deal and how we go about the long-term wealth planning that goes with owning real estate. But I really wanted to position some questions you need to ask yourself to make sure that real estate is right for you so that you're making a good decision for you, your family, and your overall wealth. If you like this video, feel free to subscribe. Again, below this video, you'll see a link to the In Search of Wealth page over on my personal website. All of the resources are free, no opt-ins whatsoever. My goal is to help you build wealth in any way I can. Leave a question or a comment below this video, and I'll be happy to help you out. All right, thank you. Peace.